Hi folks, quick update on natural gas. I've just come back from the gym. I'm still in the hotel, but let's have a quick look. I want to just update from yesterday's video, the Sunday night live stream, and quickly follow up on that. Natural gas, after bouncing off 375, rallying up, we got some profit. We took the profit off. We took the trade off at break even. We moved down below that level. We bought again late on Friday at 359, and I bought again just a couple of hours ago here on Monday morning at about 340. So we now only have two positions on natural gas. The trade that we took from 375 was stopped out at break even. The trade that we took from 359 is still open, and the trade from 343, I think it is still open. I still think we have a chance of moving higher. It doesn't look great here on the futures at the Henry Hub, but if we look at the Pepperstone ETF, the continuous ETF here at Pepperstone, we actually only got down to 375, which is the key overall support for natural gas in overall terms, and the number that I've been talking about quite a lot. And it just so happens on the continuous here, we're at 375, and we bought at the bottom when the continuous was at 375. So if that 375 and this sort of order block can hold, and we can get back up to the point of control through the moving averages and the 200 back above, say $4.20, that should set us up for the next run to break above this previous swing high at about 455, and then onwards and upwards to close that gap at the top there that we've spoken about many times. That's not a contract rollover gap, that's a weekend gap, so it probably needs to be filled at some point, as weekend gaps mostly are. So it looks a little different on the futures, as I said, but it's looking good on the continuous. And if we switch this across to the day chart and have a look at the Fibonacci support levels, although we've broken down through the 618 here and the 786 is just below us, we might have to reach that at about $3.24. I hope not, because we're long now. We might hold here. But if we look at the continuous contract here on Pepperstone and switch this to the day chart, and we slap a Fibonacci retracement study on there, you can see that we've actually come back down precisely to the 61.8% fib, whereas on the futures, we went a little bit below there. So which one's going to play out? I don't know, but we're long. And switching back to the futures chart, you can see my positions there. Let's zoom in a little bit back to the 4-hour chart just to give you a little bit of a bird's eye view on this. Sorry about that. And then have a look there. That's where we got long on the last tranche. That was the previous one. We really need to get above the black line at 355, and more crucially, here on the futures, above 375, the 20-period moving average, that swing low, and the important point of control overall on natural gas. Hope that was useful. Go and check out yesterday's video, the live stream, which I'll link at the end of this one. As soon as this video finishes, you can click on the link at the end to have a look at this in more detail in the live stream. Take care.
I'm up before the dawn, eyes glued to the screen, watching those candlesticks like a gambling fiend. Futures and options, longs and shorts, price swings that cut like a knife through the heart. Henry Hub's a battleground, bulls against the bears, whispers of a cold front send us into scares. Margins tight, margin calls, nerves they fray, wondering if I'll see green by the end.